Well, all right. January the 1st, 2026, 7:53 p.m. and it is Thursday evening. Now, take a look at what you see here. This is a beautiful picture, and a lot of you may not have known things like this exist. And there's one thing to be on the wrong time frame and the wrong frequency. Hence, the Julian calendar versus the Gregorian calendar. We know things are out of sync. They're out of sync to hide key important timelines according to our Arcadian rhythm. The creatures and the animals and the birds, the fish in the sea, the creatures that roam and navigate from point A to point B, they're on a particular time frame. They don't necessarily care about the calendar because it's usually embedded in their system as far as what season, what time frame that they're in. They know when to migrate and they know when to move. This is a beautiful chart. Periods when to make money. It has about a 90% accuracy rate, and it was built by George Trich around 1872. We're going to be looking at this, and then we're going to go into the research piece of it, and then we may periodically look back at it again because, as you can probably spy with your little eyes, 2026 is in there. So let's zoom in on this. And this may hold so true. We got column A, B, and C. In A column simply are years in which pandemics or panics, I would say, panics have occurred or will occur again. And a panic could be a pandemic. As we know, 2000 was COVID-19. In fact, 1999, I believe it was October, Event 201 came onto the YouTube scene. And Event 201 is a really interesting research piece regarding the organizations and companies in the United States coming together in the event of if there was a panic, what would we do? How would we respond? That came in around September, October of 2099. And the first case that I heard of was in December of 1999, right? And that's probably around the time I was looking at the Wuhan virus and what was going on there. And then in February 2000, Nancy Pelosi brought the articles of impeachment. I think that was in February 2000 to the House. It was a one-sided deal. The Democrats and the Republicans did not get a chance to vote on it together. And I know it was all smoke and mirrors because she was trying to create a new precedent and also understand the Kim Clement prophecies quite well. But if you can look at some things, 2020, I would say, 1999 was a dot-com bubble, right? 2000. People really remember 2000. And of course, this 2019, 2020, that history wasn't there. So hopefully I didn't say the wrong date. But October 2019, September, October, Event 201 came on the scene. Hopefully I was pointing to the right thing. All right. A lot is usually going on in my head, but usually we see A, and the numbers in between are the time frame, number of years that it takes in between these panic peaks. So we can see the repetitive numerical sequence of 18, 2016, 18, 2016, 18, 2016, if you wanted to build this out into the future. And now B has a really nice description. Everyone loves B. Years of good times, high prices, and the time to sell stocks and values of all kinds, commodities, cryptocurrencies, real estate, you name it. 2026 is right in there at a peak season. And Trump came right at 2016. So that is very interesting, right? And the numerical sequence in between here are 8, 9, 10, 8, 9, 10, 8, 9, 10, the number of years in between one cycle compared to the next of peak season. And then you have letter C, years of hard times, low prices. Well, how can you have hard times and low prices? Well, if no one's spending money, then something is not in high demand, so it drops. The value, the price drops if no one wants it or can't afford it. So this makes sense. And a good time to buy stocks, corner the lots or corner markets or corner lots, corner stores, whatever it may be, and goods, so that you can ride it back into peak seasons. So you notice 2023 here and 2026. And notice the numerical sequence towards the bottom, 7, 11, 9, 7, 11, 9. So this can be built out into the future. And of course, you have a numerical sequence in between here. 2, 5, 4, 7, 3, 6, 2, 5, 4, 7, 3, 6, 2, 5, 4, 7. And that just repeats. Now, let's go into the research piece of this because this is very interesting. Let's go here. And I uploaded the image to X's platform, Grok, by default. But I like to do more research, and I don't like to wait. So I just simply got the subscription, Super Grok. That way I can ask my unlimited questions and so forth without hitting any delays. And in fact, Super Grok has been instrumental in helping me with my beautiful chart layout. I do have a degree in computer programming and network administration. And as soon as I graduated from learning so many programming languages back in the day, Visual Basic, COBOL, C++, DOS, they got rid of everyone or most of the people in the sector because of an Enron scandal. Some of you probably remember that. Now, as you can see, I uploaded the image here and I asked a question, review the image and give me your breakdown for 2026, specifically 2027 and 2028. All right. As far as investing and selling is concerned, so it gave a breakdown of the chart. And it was created by George Trich in 1872, which I said earlier. And it's just got good seasons and times in there. And it goes into, well, there's some really good alignments on here. And it gives some examples of panic scenario, 1929, Great Depression, 2000 dot-com bubble burst, 2020 COVID-19. And some of you men remember the housing market collapse, right? Let's go to the chart because that was around, 2008? In 2009-10 with the Affordable Care Act and the High-Tech Act to stimulate the economy. You can call it quantitative easing or money printing or whatever they did to stimulate the economy. But let's see where that lies. 2007. And then the decline, right? 2007, geez. And after 2007, we did hit that 2008 housing market collapse or crisis. And some people remember 2008, 9, and 10 really well, right? And let's look at the time frame between 2007 and 2016. 9 years in between the time frame. Geez. So 2007 peak, 2016 peak, 2026 peak. Look how long you have to wait to the next peak. 2034. So 2026, get it in now. Pay attention now. Great presentation. Great timing piece. Let's go back into the research. All right, so this makes sense. And remember, we got claims of at least a 90% accuracy based on the research and videos and articles being discussed. That chart layout by George Trich that he did in 1872 is huge. Okay, let's see what this says. 2026, this is explicitly listed in section B as a good year, good times, high prices, and time to sell stocks and values of all kinds. It's positioned after the 2023 buy low prices. Wonder what Bitcoin and all that other stuff was around that time, right? And before the next C in 2032. Next C is going to be really low. That's just a few years, right? If it holds true to its 90% accuracy, right? Suggesting it's a peak in a rising cycle. So remember that, right? Investing advice per chart, not a good time to buy in 2026. Prices are inflated or will be It's there. It's only day one of 2026, which means it's a good time to get in some stuff, right? Focus on holding any positions that you brought in 2023, which we just looked at. 2023 was a C peak. But prepare to exit in this 2026 B, right? Selling advice to per chart is a prime time to sell. Unload on stocks, real estate. Ooh, real estate, right? Wonder what's going to happen after 2026. 2027, 2028 could possibly be some hard years. What 2029? Is 2029 near a peak or no? 2020, 2030. Ooh, it's longer, right? It's longer. So 2026 to 2032, what's that? 6 years. And then we hit a peak. And then 2 more years and we're going to top out. So it's good information. It's really good information. All right, let's double back. Now, the chart emphasizes holding from a C year, 2023, as the most previous example, and then going to a B year and unloading. 2027, not specifically listed in any section as far as the numerical value, but it falls right after the 2026 peak and well before the 2032 bottom on C. And 2035 is a panic. Oh, geez. So you can predict. Well, when was the swine flu? Then you have all the other minor pandemics, bird flu, COVID-19. And this thing is happening really fast, guys. Really fast. And if you lay that over biblical patterns, you can see what time it is, especially according to Revelation 18:23. That just happened, in my opinion, because of that incident that occurred right up in here, 2020. Right? All right. I think, to me, Revelation 18:23 just occurred. All right. 2028, similar, unlisted, positioned in the same declining phase as 2027, midway towards the 2023 low. The cycle length suggests ongoing hard times building, etc. This 9-year gap from 2023 to 2032, C, fits the repeating 7-11-9 pattern. No panic flagged until 2035. So this isn't a crash year, but part of a broader slowdown after the 2026 decline, possibly. All right. So it's given a breakdown, just like we've given a breakdown. Now, with that said and done, there is another question I want to pose, and I posed a question here in advance so we don't necessarily have to write it out. If you had a principal of $500 and you were able to, through savvy trading and increasing your financial IQ, gain just 6.5% every 10 days for a year, how much would you have? So $500, constantly rolling over the principal. Take a look at the final result. Oh, that's beautiful, isn't it? Now, $500 is very generous in some people's eyes, but that amount could be different. And what if our percentage was different? Let's say 9%. And what do you think? Compounding interest. Look at that. That's really nice. But let's say you have to start really small. And remember, you're basically paying yourself to learn. 15% every 10 days. Okay? Could be done. I'll show you in the charts if we get a chance. $100, 15% every 10 days after a year. So it depends on how aggressive you want to be. You're paying yourself to learn. Look at the beautiful price point, $16,000. That's the beauty of compounded interest. Credit card companies know it. I've said it so many times. And of course, the YouTube channel. And this is going to be part 6 of a training. And I recommend starting at part 1. It's going to go into Tradingview prices of where you get to see the indicators in the chart layout. It's going to advise you on having an account with Coinbase and getting that Coinbase debit card so that you can spend your cryptocurrency. having an account with Uphold so that you can spend your cryptocurrency using the Uphold debit card, having an account with Robinhood so that you can trade, buy and sell cheaply your stocks and your various assets. Training videos 1, 2, 3, 4, 5. Go in order. If you have 1, 2, 3, 4, 5 hours, and this one's going to make about 5.5, 6, then this is life changing. And let's just say over the span of your lifetime, because this chart has been out since 1872, let's say you came across this picture 25 times within your lifetime, but you never did recognize it because you were preoccupied, you had blinders on, and you didn't understand the season or the time frame that you were in. Now, since because of the price points here, or I should say the dates, the years, it may somehow bear witness with you based on previous events. The dot-com bubble, some of you remember that. The housing market collapse, some of you remember that. 2020, COVID-19, some of you remember that. And I believe it was April 2020 that the petrodollar decoupled from the per barrel price of oil. It actually went negative $40 per price of barrel. They were trying to give oil away, basically. That's when Trump did top off the strategic reserves for oil because Biden was selling it to China. Go figure. In order to stabilize the economy and all his other stuff he was doing. Let's look into the chart. And one of the first things we wanted to look at is the unemployment rate. So I'm advancing to the 1 month chart. I open up this little icon here. This is the Tradingview app. You can trade it on or look at it on the internet itself. And that's fine. www.tradingview.com. And I'm speaking really fast because I know time is going by really fast. I don't want to make this a long video. Let's look at unemployment rates. All right, so I'm scrolling down and we're to the bottom. We're getting to the bottom. All right, unemployment rate data. All right, it's loading. And since we're on the 1 month chart, every dot represents 1 month, but I love the Heikin-Ashi. So I want bars. So we're going to add the bars if possible. Now, look at this, right? The unemployment rate currently at 4.6%. 4.6. And based on cadence and other things in the chart, you know that this unemployment rate data is increasing. The markets are heating up in the background. You can see that visually speaking. The last 1, 2, 3 months, they've been heating up. The unemployment rate has been heating up. The stochastic RSI, consisting of the red and the green line is above the red. And the RSI, the white line, is above the black. So unemployment is heating up. Now, if we look at some history, look at this. Look at that unemployment data right there. And look at the time frame. Holding true to the information in the chart after 1999, you did have some problems here. 15% unemployment rate. And remember, Biden was saying millions of jobs created, and we found out that was a lie this year. And so we don't know how bad things are going to get. We don't know if we're going to have another spike up, but no one likes to see those seasons of panics that we looked at as far as here, right? Now, 2019, 2020, I don't know if there's anything that really stuck out 2020. 2020, and remember, this is just a 1 month chart. So 2020, that's when Biden started fudging the numbers and hired a lot of government workers. DEI people were just hired just because they were male, female, or of other. And, those true numbers eventually have to start coming out because we're moving to blockchain, right? So who knows what this is going to look like, right? Or after 2026, what this is going to look like between 2026 and 2032. All right. But we know This is a beautiful thing. Let's get rid of that since we don't need to look at it anymore. Let's go into the learning chart. In the learning chart, we wanted to add lines of support and resistance, not just one, but 3. And these lines of support and resistance are going to increase your confidence, especially since we're butting up against a alternative cryptocurrency bull run, folks, which means 2026, if you know what time it is hot. Let's move to a 10-second chart. And ZBCN is usually our learning chart because we get relatively clean signals. If there's no computer processing hiccups or internet lag, usually the signals are nice and clean. They come in relatively faithfully. We know that every bar represents about 10 seconds. We're looking at support and resistance lines. You already know that from the previous episode in part 5, where we had 1. Now we have 3. We've adjusted for sensitivity. So we have, as you can see when I pan through the settings, a 6 and a 1. We have a 5 and a 2. And we have a 18 and a 3. That 18 and the 3 was great to increase your confidence, but now we really wanted to increase it. So even though we're riding relatively flat here, I mean, you can see the 3 dynamic lines of support and resistance. If resistance is greater than support, then you will drop. If support, like we see now, is greater than resistance, then you tend to go up, and you can see the flashes to the upside. If you have a floor or a foundation and no roof, you can go up. When they're about even, you pause, you wait, you don't want to make a decision. And again, the reason why we're training on a 10-second chart is because even though a lot can happen within 10 seconds, the same chart layout, the same ideology, the same methodology and concept is the same thing that happens on the 5-minute chart. On any time frame, 45-minute chart, 4-hour chart, 12-hour chart, 1-day chart, 4-day chart, 1 week, 2 week, 1 month, and we can go even on any time frame. My chart layout is the chart layout. Once you learn the chart layout, sky's the limit for you. You have excellent entries and exits. Now, when we start combining pieces of information together, let's see, EMA, I guess I can double click. We probably got the pi cycle top for this one. All right, so we got the pi cycle top and the 2-pole oscillator cooking too. We can see yellow value moving out and blue value coming in. We can see support is greater than resistance. The line is more extended to the right than the yellow. And now the yellow is more extended. Well, it flashed, right? It's always thinking within that 10-second time frame. You can see the market somewhat warming up in the background. That's yellow, white, and pink. Now it's going nice. And of course, resistance now longer than support. So you could tend to go down just slightly. You're constantly watching the lines, 3 lines. Any one line that's longer than the other, if you have a floor, you can go up. If you have resistance, you can go down. When they're about even, you pause on your decision. And the reason why I'm letting you see this in 10-second intervals, again, the same thing happens on various time frames. It lets you think about things more quickly. Now, you got the wind channels and all that other stuff, and some of you probably can just trade on just raw data of the support and resistance lines without necessarily seeing the charts heat up and cool down in the background. Even though part 1, we count cadence and we do all these other things, this is going to make you a much more savvy investor, to include the beautiful pi cycle top, giving you really good areas of entry until you write it in the shade of orange and boom, bada bing, value, right? Same concept on higher time frames where the percentage increase is great. Look at it, they're about tied. So you pause and you wait, right? You don't make a decision right there. The price running relatively flat. Now we can see resistance is greater than support, even by hair. Yellow is longer than the green. Let's see when the green flashes over to see when we get a reversal of the trend. Notice with the stochastic RSI, the red is beneath, or I should say the green is beneath the red, and the white is beneath the black. You can see that visually over here too. Green beneath the red, right, white beneath the black. Now the reversals happen quickly. You got support. And it's just a beautiful thing. Look how fast it happens for you. It's thinking really fast. It does the same thing within 10 seconds, same thing within 5 minutes, 11 minutes, 12 hours, 1 day, 1 week, 2 weeks, 1 month. Same thing. Now, these are about even with resistance greater than support. You got value wanting to come in, but of course, support and resistance is superior. Let's put our information back on so we can see everything cooking together in unison. And we'll put the simple moving average on there too. The wind channels are really beautiful, right? So you can see where you are. We could put the 111 and the 700 on there too, but it may compress the candles. You may not necessarily see as much, how much it compressed it, but you see where you are, right? We know we travel down through the positives and up through the negatives. These are all negative channels here. So you do have the opportunity to increase in some value relatively quickly. Let's take the 111 and 700 off. And now I want to pan through the various time frames so you can see what time it is, folks. A lot of people don't understand what time it is. We're going to pan to, all right, so just look at it a little more and convince yourself that the 3 lines of support and resistance working dynamically together can be a beautiful thing. Resistance greater than support. Resistance still greater than support. Thinking still greater than support, waiting on the signals to come in through Tradingview with ZBCN based out of South Korea. The whole chart is talking to you faithfully, religiously. See that right there? Let's see if support comes through. There's support. Resistance and support, still a little bit more support. Support is just a hair ahead. Let's see if things change. Riding flat. Now you got resistance greater than support. You see that? Just a beautiful piece. Now let's go to a 1 month chart. We're going to go to our beautiful asset XRP. XRP, you got to get you some XRP. XRP is deemed to be the next Bitcoin. If you do your research on XRP, go to any search engine, whether it be artificial intelligence, Grok, Super Grok, Chat GPT. They got some financial trading artificial intelligence platforms too, called Trade GPT, I believe. And you pose that question, Swift and ISO 20022, and you want to have it name you the blockchains associated with ISO 20022. Again, sorry, that was a hiccup. ISO 20022. And you want to take a look at what's literally going on, because one thing I can appreciate about is transparency in the White House. I can appreciate that. Let's take the Heikin-Ashi candles off. And when we take that off, you'll see the trend. Blue is up, yellow is down. All right. And not that we want to look at ZBCN, even though that's a beautiful cryptocurrency. Let's look at one that you stack, not necessarily trade, but stack. Let's look at that XRP. XRP sitting at about $1.87 on the 1 month chart. And of course, for this exercise, I just want you to look at the 3 dynamic lines of support and resistance. You tell me if we have support or not. And keep in mind, we just started the month, right? We're just 1 day into the month. Just 1 day into it. Yet, even in the downtrend, it's saying we have support, folks. What does that mean? Well, you can count cadence like we did on part 1. And you can do your due diligence. Like we say, disciple is a student. And the master teacher is the school, and in discipleships, students sit under the tutelage or school of the teacher. It wasn't necessarily 4 walls in the building and desk like we see in colleges and schools today. But if you sit under someone's methodology or ideology, that is a school of thought. So according to the late and wonderful Dr. Miles Monroe, Socrates, Aristotle, all these guys, Jesus Christ, were schools. And that's a beautiful thing. Now, I am the master teacher of my chart layout. And with these 5 parts, and of course, this is part 6, you should be a master teacher too. Now, imagine just coming on just the few minutes of training here, and you are just convinced by yourself with lines of support and resistance that can make you highly successful in 2026. And you're collecting and stacking XRP, possibly the next Bitcoin. And let's say, according to the next peak cycle, right? Maybe things are going to be dynamically explosive for you if you were to hold on to this for a few years. The problem is people are so microwave, they can't wait. But this is why I'm showing you a 1 month chart. And let's do some measurements, because some of you played that long game really well. I'm going to measure from the bottom here. This is truly a red candle. We talked about red and green candles already, even though I painted my candles to show a trend. Let's measure just from here, even though there are some wicks, right? 31 days, 270%. Oh my goodness, 31 days, 270%. Well, hang on. Didn't we pose to artificial intelligence, what if someone had $100 and they can gain like 15% every, 10 days? And here on these time frames, whenever there is a bull market, or you're in what we call the influence of the 2 and the 6 golden cross, that's a beautiful thing, right? Now, let's measure from here. Let's measure from here to here. We've done this in the past before, to the peak of the wick. Ooh, 92 days, 570%. Well, shucks. What if you had $100 in the trade? Right? Well, just multiply it by 570%. What if you had $1,000 in the trade? What if that was income tax money? What if it was $2,000 and $10,000? And I know some people are probably saying, I would never tie $10,000 up for, and people just have to stop thinking what we call small. Their brain is in the way. The programming is in the way. Investors and traders, they think on a different level. They're trying to squeeze that interest. It's like a wet rag. If I can squeeze this wet rag and get some moisture out, that's what we're doing with principal. I'm going to take that same principal and just squeeze it every month, or for whatever time frame I'm on, because we have lines of support and resistance. And right now it's saying, hey, you should probably think about getting into XRP. Now, if I was to get into XRP at $1.87, hypothetically, and let's say I brought 100 of them, and let's say the price drops down to $1.50, you think I'm going to panic when I see this line of resistance hasn't moved? No, I'm probably just going to try to buy some more, because I trust my own blood, sweat, and tears. And I used to take everything apart. Everything, you name it, I took it apart. Everything I took apart. I wanted to know how everything worked. Everything worked. I had to see what was inside. And so this school of thought, as my students sit under my tutelage and they follow through, now they've enlarged their tent. And some people don't like to pay for education at all. And if they do pay for education, sometimes you have to work on a client list or customer list and all this other stuff. And sometimes, in hard times, people just don't have the luxury many times, or they don't believe, when clearly, according to the periods of making money, this is what this is talking about. Look, we can look at any asset that I can put in this chart layout. My students can read it. My disciples can read it. Now, let's pan through, because we don't want to make this too much longer. And let's go through the freestyle view so you can see the Pi cycle top in connection with the support and resistance lines. We want to simply review the support and resistance lines. All right, so we're going to load a different chart, the freestyle view, which is a beautiful view, and it allows us to see the beautiful Pi cycle tops. Let's go to the 1 month chart. And of course, it's going to look the same. We are on XRP. We see the market's cooling down for the past 1, 2, 3, 4 months. Cool down a little more. That's fine by me. I can see the
stochastic RSI, the green is beneath the red. And I can see the RSI, the white is beneath the black. And at any moment, we can see a turnaround. On the 1 month chart, we have support, folks. That's the part that I wanted to show you. Let's double click on the background and let's see if we can load the Pi cycle top for. I hate to take those off. I have to take something off. Let's take the wind channels off. All right. All right. Had to take one of the indicators off because for me, for my level, what I pay for is I get 22 to 23 indicators all at one time. And sometimes the programs are so monstrous that I have to take one off in order to show another one. So you can see the Pi cycle here. The Pi cycle top, again, the principle, in the shade of black or sometimes green is when you want to get in, because when you start hitting this shade here into orange, explosive gains, Pi cycle top. All right, so that's for the 1 month chart. Now I'm going to turn that off and we're going to pan to the 2 week chart. Right, let's take that off, the 2 week chart on there. And just to show you, we got Pi cycles along with support and resistance. I really want you to focus on support and resistance because we covered Pi cycles on previous parts of the 5-part series. All right, look at the area of dollar cost averaging of when it was time to get in, right? And do you have support or resistance? We have support. Support is greater than resistance. It extends far further to the right than the left. This is a great place of entry. And notice things look different than the 1 month chart. The green looks like it wants to cross above the red, and the white wants to cross above the black. Looks like. Let's look over here. And look, the green has crossed above the red. It's so close together. It's like under the radar. You could barely see it, but this is a great entry point. You have support. And as you saw in the second chart, even though the lines dynamically flash, you see the lines flash and then you go up, or if resistance flashed through, you go down. So who knows how long we have to wait before things start ticking up, right? But we have support. Now, can it be taken away and resistance be longer than? Yes, this line could disappear. A lot can happen within 30 days. It's only day one, right? But the Pi cycle is there saying you want to be paying attention because things always turn around. So you'll be able to catch the turnaround. And you who want to get in low and ride things high, isn't that just like the A, B, and C version? Except we're doing it on a monthly basis. We're doing it on a 2 week basis. We're doing it on the time frame, but this is like the big picture, right? Because this is saying if you really want to plug in when things are really at their best and possibly at their worst, then it's just showing you this chart by George Trich is showing you a bigger time frame than this. Okay, we can look at things as far as years at a time. Let's minimize that. I was going too fast. We can look at like a 6-month chart and 12-month chart where every bar is, a year. You can do that. As soon as I minimize these, I'll be okay. If I slow down, right? Get rid of that and put the days on. All right. And just look at like a 2-month chart. All right, look at the 2-month chart. The support and resistance lines are dead even, right? The yellow and the black. I'm sorry, the yellow dotted lines and the green, dead even, right? All right, let's go to the 2 week chart because we did say we have support. And we're about to go to the 1 week chart. And remember the Pi cycle top for the 1 week chart, which is right above here. Beautiful. Now notice This right here for the 2-week chart, all green. But now it's picking up trades within the trade. And remember, the higher the time frames, the bigger the percentage moves. Now, from 1 week to the next, you can have a trade. For example, this is a wick here, and this 1 week candle can be broken down into 7 candles or 7 bars, right? All you had to do is move to the 1-day time frame. Just like this little bar right here, this bar, I can break down it to almost infinite bars by moving to a lower time frame. Let's measure from here to here, right? Because the entry is the greenish color. I'm sorry. It's the greenish color here or the reddish cranberry color. All right. Let's measure that. And this is like going from week to week. Bottom of the wick, top of the green. Well, shucks. 7 days, 18.2%. Just 7 days, right? But hang on, you're in a down cycle on a higher time frame, but on lower time frames, you always have trades within trades. All right, let's look at this one right here. Even though it's green, that's a trade right there. 7 days, 11.73%. Right? So, I mean, you don't have to trade on the 1 week chart, but I'm just showing you there's trades in there. Let's do this one from here to the green. There's a little wick there, and there's a wick right up here. 7 days, 12.34%. Well, that's nice. That's nice. It makes things realistic for you. Now, let's go to the 4-day chart. We don't necessarily have a pie cycle for the 4-day chart, but we do for the 2-day chart. So, again, looking at lines of support and resistance, let's see if we have support or resistance. I see support is greater than resistance. Support is greater than resistance. We're auto adjusted. Yes, support green is greater than resistance. Beautiful. The chart for the last 8 days are warming up there. In fact, here, 4, 8, 12, 16 days, the chart has been heating up. This next candle prints on the 5th, as you can see towards the bottom of the screen there, the 5th of January. Beautiful, right? That can signal a turnaround now. Can things change on the fly? Yes, but my chart will let me know. All right, 2-day chart. We do have a pi cycle top for the 2-day chart. You can flag support and resistance. And that's what you're looking at. Support and resistance lines. You don't have to have just one. You can have multiples. All right, so this one, let's double click on the chart. Even though for this time frame, you have such a serious downtrend. We did talk about taking a trade with the 21 simple moving average moving down. This one, you do have one from here to here. Now it's plugging out that weekly one very nicely from here, bottom of the red, top of the green here. And then you have one from here, which we probably already measured. And you have the 2-pole oscillator saying, hey, value flowing in from yellow to blue, value flowing out from blue to yellow. And you can see the constant downtrend there with a few trades here and there. But this is a bigger time frame. If you went on a lower time frame chart or a faster moving chart, you have trades within trades. Okay. All right. Here you have resistance is greater than support. Resistance is greater than support. But the markets are heating up in the background. I can see this pink goes to a darker red. So we're waiting for support to fly over as a really good entry time. We'll see what happens. It doesn't count until this blue and green, they're combined, slides over. You can go into the next 2-day segment. This next candle prints on the 3rd. If it doesn't slide over to the left, it doesn't count. So a lot can happen within a 2-day time frame. So you let it happen. You see how the chart is developing, right? So you can move to a higher time frame and play the long game, or you can move to a faster moving chart and play the quick sniper game. So you can see you got resistance greater than support, but on other time frames, it's almost like saying if you make a mistake, your higher time frame will bail you out because you have support on the 1 month, the 2 week, the 1 week, and the 4-day chart. So if you got in and changed your mind or something shot over as far as resistance being longer than support, I mean, plan to buy more. All right. So it's always good to dollar cost average, right? That means buy some periodically at certain time intervals, or you can use the chart to look at the best times to buy. 1-day chart. And this is the pi cycle right here along this line for the 1 day. It's generating, it's loading. Now we're more specific, but like the 2-day chart, except for you probably have better trades. Everything is really compressed. Resistance is greater than support. You see that? Resistance. Correction. Support is greater than resistance. You basically will have an uptrend, which is nice. Double click on this. That's nice. It's nice to see. Because just like you saw on ZBCN and you saw on the 10-second chart, the learning chart, the chart dynamically is working together in your ultimate favor. 12-hour chart. You tell me if we have support or resistance or not, where every candle or every bar represents 12 hours. Relatively flat up in here. Really flat. And flat is a good thing. You have support, and you can see the candles were painted from yellow to blue, indicating an upward trajectory. Now, that is some beautiful stuff. Let's double click on it and see if anything is flagging on the pi cycle top for the 12-hour time frame. And 12-hour time frame, yes, you do have the bottom here to the top here. You have one here from the bottom to the top. You have one here from the bottom to the top. And of course, you have other various time frames. Really nice chart layout. Since we added a total of 3 instead of 1 support and resistance line to adjust for sensitivity so that you can get your answers on the fly. I can pan through any asset and tell you if it's a good time to buy or a good time to sell. On the micro and on the macro and on the super macro, right? Now, let's continue to look under the microscope, things microscopically speaking, so that we can see the dynamic support and resistance lines working on time frames lower than basically 12 hours. Let's let this load. Ten-second chart. We don't want a 10-second chart. Go 12 hours and then probably 6, 4, 45-minute chart. And then we're going to end with ZBCN on that 10-second chart, just so you can understand and trust what you're looking at, folks. Because, some people think of things as very complex. And with the beauty of computer technology, it's taken a lot of the hard guesswork out. My support and resistance lines will have you looking more critically at the chart. It is encouraging you, play the game, play the game, play the game. Look at this. We can see that support is greater than resistance. You have support, you have a floor, you have a foundation. And as you count cadence and looking at the markets heating up in the background, that's all encouraging news. That's on the 12-hour chart. We've seen that. Let's go 6-hour chart. And let's see if we got the 6-hour pi cycle tops cut on. You see the ups and downs here. Even though everything loads, it's probably going to compress a little bit more. 6-hour chart is showing you support. Across the board, this thing has been showing you a lot of support for XRP. Look at that big green, red negative channel. And I'm saying negative for a reason, because negative should sound an alarm in your head saying, hey, don't we travel up through negatives and down through the positives? Yes, we do. Yes, we do. Now I'm going to take this big old wind channel off because it's compressing things so much. All right, we opened up a little bit. Make sure we're on auto. We are on auto. And let's double click. No, double click on my actual background of the chart so we can see the pi cycle tops. All right, we got the pi cycle top for the 6-hour cooking along the bottom here. At 12-hour. Let's take the 12-hour off. We got the 6-hour pi cycle top here. And now you got more trades, right? This line could be a bridge. It could be a bridge saying, hey, stay in the trade. Maybe something's going to drastically bound higher. Or it can sort of tell you, you probably want to get out the trade like it did here, right? That was a great exit. So Lime is usually saying stay in. If you get an orange behind it, you have to count cadence to see what's going on, or look at your support and resistance lines. The market's heating up, cooling down in the background, or move to a faster moving chart to see what's going to happen before it happens on a higher time frame. You got more trades in there. You see more orange, right? Two-pole oscillator doing its thing. The zero lag is doing its thing, right? And you got support. Beautiful. You got support. Now, compress time a little bit. Look at this right here. Bottom of the red, top of the blue. Here and here. That's a really good entry point, right there. Let's measure it, shall we? 7.36% one day, 18 hours. And some of you probably say 7.6. Look, if you were one of the ones that got laid off or something like that, or, sometimes hard things have to happen just so people can be attracted or turned onto the information they face the whole time, but they're turning their nose up at it because everything was good. It's usually pain and pressure that makes diamonds. And for just a few hours of training, that can be dynamically explosive to let you know, hey, what time it is. That's a beautiful thing. So now you can just gauge here, since we did measure from here to here, that's about over 7%. And you probably got like 4% in here. You probably got 3% in here. And all this accumulated or compounded interest adds up over time, right? Adds up over time. And this, again, is a cryptocurrency that you stack. Your trading is going to be more dynamically explosive with assets that move more greatly compared to XRP. Let's look at Bonk. Bonk is usually a very exciting mover. All right, so your percentages gained like from here to here, here to here, and here to here are going to be bigger. So we'll measure like what we did here because the Pi cycle top is consistent. It doesn't matter what you put on. Support and resistance lines are what they are. Look, now's a good time to get out that trade because, hang on. Support is slightly longer than resistance. Notice how I measured that? Now it's changed. Resistance is greater than support. That's a great time to exit the trade. All right, so let's just measure this one because this is Bonk. Great area of entry. In fact, I'm going to blow this up a little bit so we can move that and measure it more accurately. Now, do you think that's a nice little percentage there? Let's measure it. 9.52% one day, 6 hours. Let's measure another piece. Let's measure one right here. Right? Remember, the green or the red are great times to get in, and then the orange is when you get out, as far as looking at support and resistance and so many other things in the chart. Let's get in right here. Let's measure to the top of the wick here. 3.70%. Is that 2? It's hard to say. Let's say 3.2. I don't have my glasses on right now. So that's beautiful right there. A $10,000 trade, $320. A $5,000 trade, $150, $160. Right? That's beautiful. All right, the day is done. I mean, it depends on how aggressive you are. And that's just a small piece. You have dynamic oscillations up and down, right? You have some really good trades in here. Let's measure from here, the green here, to here. Maybe it's another 3%. Who knows? Bottom of the wick. That's a great exit. 4.65% one day, 12 hours. Well, shucks. It sort of holds true to if you had a certain principle. And you can see I just measured in a few places. That's an easy 8% every 10 days. I mean, easy. So it depends on your principle. Despise not small beginnings. You can take something small and really work it. If you start compounding interest with a small amount, with a high level of accuracy, you're good. And my chart does talk to you. My chart is something that was broken apart and working together. It could be back tested almost anywhere, especially with your Pi cycle tops. This thing is just beautiful. And of course, you got the dates across the bottom of the screen, right? So you can see when these trades would have been done. This looks like a relatively large move, right? That's a beautiful move. 1 day, 12 hours, 9.69%. What if you had $1,000 in the trade? It's $96. Well, shucks, just do that 2 more times in a week, or increase your amount. What if it was a $10,000 trade in principal? Well, that's $969. The week is done. Now you just got to do it next week. No pressure. No pressure. 24-hour market is going to be here. Take that same principle with a high level of accuracy. This is not a lottery ticket. This is skill, right? Skill. All right. Closing out. ZBCN. You guys get the gist of it. As you look at charts, your financial IQ will begin to increase. I like that. So let's move back to XRP and then save this one. And then we'll move to our learning chart layout where the screen is dynamically larger and bigger. And we'll look at ZBCN closing out so you can trust your support and resistance lines. Let the chart think. If the chart is thinking about something, it's taking almost everything into consideration you can possibly think of, to include the wind channels, the golden cross and death cross of the 2 and the 6, the 9 and the 21, the 13 and the 48, the 15 and the 200, the 111 and the 700. He's taking everything into consideration. The RSI, the stochastic RSI, is taking everything into consideration. Let it do that on your behalf. Save that. Then we're going to our estimated moving averages, and we're going to end with ZBCN, since we get quality, really good signals with ZBCN based out of South Korea. And even this one, folks. Now, ZBCN is a really big mover. You could probably get it on Uphold. It's not necessarily on Robinhood. Let's just move up a little bit so you can see the percentage increase. 31% right there. If we move back to November's close, or November start, that's 53% there. I mean, when these candles turn blue, it's going to be beautiful. And you're probably going to say, oh my God, that was so easy. And you're going to be hooked on trading. All right, back to our 10-second chart. Looking at support and resistance lines, the pi cycle top, and the 2-pole oscillator, everything working in unison with each other. Support and resistance basically tied now. We got support and resistance. Now they're tied. It's dynamically working together. Resistance, support is there. A lot happens in 10 seconds. But again, support is definitely there. Resistance and support tied. Resistance. Look at it. The price is riding relatively flat. I mean, sometimes you get that. Sometimes you get that. Resistance greater than support. You can just visually see it, right? You can visually see that. You're not going to be getting in the trade whenever your resistance is greater than support. The pi cycle top is always true, though. Look, bottom of the red, top of the blue. Pi cycle top holding true. 2-pole oscillator holding true. Value flowing out according to resistance, true. The market's cooling down, true. You're traveling down through the positive, true. It's a green channel. You travel down through the positive, but up through the negatives, true. Your squares are bringing you down through your 111 and 700, of which I've taken off the screen. The dotted white lines, where it's taking you up through, it's pushing you up through overall, but you're probably going to get canceled out of there. Those white squares are trying to push you up through this massive channel here. True. You're consolidating within the 200 and 400, the dotted green lines. You're going to either go down or up. Like beautiful time frames, guys. Hopefully everyone knows what time it is. And hopefully you're encouraged to trade with the beautiful indicators I've taken apart so wonderfully and put back together, so that you guys can take advantage of times, cycles, patterns, and seasons. It's just a beautiful thing to look at. The majority of my time is making music, writing songs, looking at charts, enhancing the chart layout, writing and fine-tuning programs, watching macroeconomic data, politics, of which the things we've been programmed not to do or look at or pay attention to, seeing how I can make myself a better trader and investor and not to miss the boat or the time frame because of hard times scheduled to most likely come. And I don't want to necessarily see those hard times, but I want to have prepared by planting seeds and have those seeds bloom and blossom in their season. Support greater than resistance. Things can change, but we'll see what happens. Resistance and support still a little bit. Support greater than resistance. Markets heating up in the background. Resistance now greater than support. And support greater than resistance. Tide. Support greater than resistance. That's a downtrend. We talked about the 21 simple moving average. When it's moving down, then it's going to be a hard time to take a trade. So you'll be relying on support and resistance. The market's heating up and cooling down, counting cadence after yellow comes blue, and watching the pi cycle top after yellow comes blue. Let's see if that blue is going to come anytime soon. Green, beautiful entry point, right? Look at the moving average right here. See that moving average pointing up? Look at that. There's that blue. Will the blue usher in the green, or after blue comes yellow? So of course you're watching the markets, you're playing the markets, and you're counting cadence, and you know what comes next. Support is less than resistance. Resistance is now tied with support because your 21 simple moving average is moving down. We touch that white line right there and start landing candles on that white line and above it. It's showtime. Uh-oh, 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 uh-oh. Come on, come on, come on. Look at that. Look at that. Touching on the white line or above it flattens it out, and then we want to catch it on the way up. Look at that. Look at that. Look at that. Look, I haven't even paid attention to support and resistance. I was just looking at support and resistance. I was just looking at the white line, right? Yeah, it's beautiful, beautiful. Now, can you go down? Yes. So you're watching the two-pole oscillator and you're watching the moving averages within the pi cycle top. It's going to tell you when to get out. Look at it. Look at the line about to cross now. Pay attention. Pay attention. Market's heating up. If it cooled down, you'd probably be out of that trade. And remember, this could have been minutes. It could have been hour bars. It could have been day bars. It could have been 2-day bars or 1 week bars, 1 month bars. That's how you want to play this game, folks. It's so freaking easy. It's so easy. Now, make yourself better. Be a good disciple and make sure you pay attention because we're in a very unique season and time where most people are about to get some serious up and comings. And who knows? You might really appreciate it and need it. You'll thank yourself. You will thank yourself. You will thank yourself. And pay yourself to learn. Pay yourself to learn. Pay yourself for taking risks. You might not have $5,000 or $10,000, but you will one day if you keep at it to trade and not worry about it. Okay, yeah, I'm gonna do my thing. I'm gonna put this in here because I trust the chart setup and the time frames that we're in, and I've looked at the same asset in multiple time frames, and everything is looking like we have support for a lot of assets. Now I know anything can happen in the world, and explosion can go off here, a bomb can go off here, or something good can happen. And this is what we're looking at. We're looking at the thing as far as the assets that we can unload or offload. Look at that. Resistance greater than support. Look at that. Now, you want to catch the turnaround, don't you? You want to catch the turnaround. Look at those resistance and support are tied. They're both on that same line. Ooh, that's beautiful right there. I like to see that. Green is usually a great entry point. So let's watch the two-pole oscillator and let's watch the moving averages. There it is. There it is. So watch support. Support is now greater than resistance. That could be a good entry. And that just that uptick, whether it be a few minutes or 30-minute segments, 45-minute segments, it could be substantial for someone. Just that little uptick from here to here could have been big. It's almost like cheating. It's almost like cheating. And cheating for a lot of people simply means something was gained easily. Something was gained without a lot of unnecessary work and effort. Cheating is profit or profitable. Eth- ethical cheating, right? Is what it is. You're trading against the people or the machines who don't have the patience or the time to wait, right? Because they got to get theirs when they got to get theirs. You got to get yours when you got to get yours. Very nice. Very nice. We just have to conclude it there, folks. But the support and resistance, this alone, part 6, should encourage you to go back and really take your time, just a few freaking hours, to learn something different, something unique, something that's not hard. If you learn one indicator at a time, such as support and resistance, that alone can have you making gains. But you got all the other indicators too, telling you when charts are heating up and cooling down, and you got the big picture. And you got the picture of when you can have explosive moves or explosive gains to the upside. And this is ZBCN. It is ZBCN. After yellow comes blue. This too will turn around. It too will turn around, folks. 4-day chart. When these fragmentation grenades begin to go off, when they begin to go off on our other assets, I mean, it's going to be big. When these grenades showing the tops of many assets, when they start to come over here into the future, 2026, it's going to be big. Now, holding true to the chart, don't we travel down through the positive colors, green, and up through the negative colors, red? Yeah. And you can see that in the history of the chart. I can compress this thing so much, and you can pan out and look at the cycles in the pattern, even though it's really compressed here. Oh, you don't have a lot of history. You'd actually have to move to other time frame. At those wind channels load, just beautiful. Decompressed time. And you can see that. You can see that channel right there is yellow. Up through the yellow, down through the blue, up through the yellow, down through the blue, no matter how small. No matter how small. Decompressing time. Up through the yellow. You see the yellow, right? Down through the blue. Look at that. We say up through the negative. Now you finally got through the big channel, up through the negative, down through, or taking you down through the positive, right? Even though you have price action blowing you up still. Beautiful, beautiful stuff to behold with my eye. I spy with my eye a season and a time frame of knowing what time it is. Beautiful, beautiful. Go back to XRP and close that out. And I usually will put on a beautiful piece. Let's go back to XRP. I'm going to read that disclosure here, but everyone needs to understand that I am not a financial advisor. Nothing in this presentation should necessarily be deemed financial advice. XRP, stack, collect XRP. You want Bitcoin, don't you? Don't you wish you had 5 Bitcoin or 10 Bitcoin? I tell you, people can't wait. They're not long-winded at all. People have a microwave mentality. People are living for right now. And some people live for right now in the moment, and some people don't. But this is a big picture. You got to appreciate where you are. If you miss this, you have to wait 8 years. And you got 2 years to prepare for that, if you have anything, to take advantage of that. So from here, 2026 to 2032, and that's 6 years. 6 years, you want to take some of that in here, maybe 10, 15, 20% of it, and roll it down into 2032. And you should make so much money in here this year that when it comes time 2027, 2028, 2029, 2030, 2031, 2032, you should be making so much money that by the time you hit 2033 and 2034, it carries you the next 9 years. Right? That's ideology and thinking for you. You have to invest. If you don't, you're just relying on assets that probably aren't recycling and repeating themselves and gaining interest off of it. And eventually you'll run out. But it takes skills. What do they say? Skills pay the bills. That's what basketball players say. That's what boxers say. That's what athletes say. Skills pay the bills. And because finances is so personal and so private, sometimes you can't tell everybody you're doing or your plan, right? And if you're making gains and you're compounding interest, ain't nobody's business but your own. And hopefully you eventually be in a position where you take care of your family, friends, and loved ones. Hopefully it becomes dynamically exciting for you. Hopefully you find further vigor and vitality for life and living. And hopefully you make what you want to make, because this is a season of promise. It's been promised to us. But it's one thing to have a promise and be excited about it. It's another thing to lay hold of it. So this is just an avenue or approach whereby which many people can lay hold of what they feel like they've been promised. With that said and done, disclaimer. Take a look at it. Read it really well. Enjoy it. Love it. And I'm going to put on our exit here because people simply need to understand. I definitely don't like dealing with other people's money, right? So take a listen to this.
Your instructor of this extraordinary chart layout and information expounded upon is not a financial advisor, and nothing in this presentation is financial advice. Cryptocurrencies, ETFs, ETNs, stocks, bonds, commodities, you name it, these things can be highly volatile. You could lose all of the money you invest. You should always do your own research and consult a qualified, licensed professional. Your investments are your sole responsibility, and you should know that nothing is ever guaranteed when it comes to investing or trading. You know, an explosion can go off somewhere, a train can derail, a bank could collapse, or there could be a break in the financial system. There could be a temporary liquidity freeze. Also, somewhere in the world, war can break out in another country as we see Russia sparring with Poland. A volcano can pop its cap. A political scandal can appear out of seemingly nowhere. The Fed may not lower interest rates when expected. ETFs may or may not get approved when expected. The spread of an illness can place countries on lockdown as the world experienced this just a few years ago, and these are just a few examples that could set off markets to rapidly flip one way or another. Unexpectedly and unpredictably, so nothing is a guarantee. Your captain, nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational side only. Stay objective and stay informed. Always follow the money indicated in the chart inflows many times before key events in the social economic, and political climate forms its narrative in the news. Take the time to like, share, comment, and subscribe if you enjoyed today's content.